There's 104 days in summer vacation. This is Dan on your Inside Team McGraw. It is Wednesday, June 20th, 2018. Get ready for today's Mortgage Minute and a Half. 1 o'clock, the best time is 6:30, hands down. And in housing, the best time to buy a house might be right now. If you're trying to maximize your budget, that is. Because according to Black Knight's most recent Mortgage Monitor report, the share of the typical homebuyer's income needed to make payment on a median-priced home has climbed to 22.8%. It's the highest recorded level since May 2010. Now, this is partially because of the rising price of homes, but the half-point climb in mortgage rates through the first 6 months of the year is a factor here too. And for buyer of homes, home affordability isn't defined by how much a home costs at its sticker price. It's by how much a home costs to own on a month-to-month basis. That's mortgage payment, real estate taxes, homeowners insurance, mortgage insurance in situations when it's called for, and the ongoing costs of maintenance and upkeep. So if you've been shopping for a home for an extended number of months, today is a good day to circle back with your lender to make sure your pre-approval is still valid and your budget still works. It's good to be on top of knowing how much home you can afford. A mortgage market's a sporty, energetic fraggle who especially loves swimming and diving because mortgage rates are red today. Rates for conforming, jumbo, FHA, USDA, and VA mortgages are all moving higher midweek. Your specific mortgage rate quote, though, will be individualized. Where you live, how much you're borrowing, and your credit score, along with about a dozen other factors, determine what rate you'll get, which is why your rate won't be the same as your neighbors. And remember, the best mortgage rates go to those who do some research. So talk with 2 or more lenders and find your preferred combination of rates, fees, and service. The more things change, the more they stay the same, except when they're changing. Like with mortgage guidelines are the rule books the lenders use to approve home loan requests, and Fannie Mae has released an update aimed at making it easier for buyers of condos to get home loan approved and at cheaper rates. 12 changes make up the guideline updates in total, and they're mostly inside baseball, but the key idea is that the condo building that you live in now or that you're planning to buy in the future may be eligible for cheaper mortgage financing by a percentage point or more off your rate. See, in lending, there's 2 classifications for condominium buildings. There's warrantable and there's non-warrantable. Warrantable condos are considered safe. They're the ones in buildings where most or all the units are sold, where there's few, if any, rental units at all, and where the building balance sheet is financially healthy and stable. Non-warrantable condos, it's everything else. And to lenders, non-warrantable condos are a higher risk, which means for consumers, higher rates. But with the Fannie Mae changes, formerly non-warrantable condos are now warrantable, which means that cheaper loans are there for the taking. So if you live in a condo or plan to buy one, get with your mortgage lender about the condo guideline changes, because your warrantable condo deserves a warrantable loan interest rate. Gorilla does timely and relevant mortgage news 3 times weekly, Mondays, Wednesdays, and Fridays, and a live interactive show each Thursday at noon Eastern. So leave a comment, ask us a question. And you know how you find Will Smith in the snow? How? Check for fresh prints.